Welcome back traders. Today we are looking at the Euro USD 4-hour chart and we have a classic bearish reversal pattern forming the head and shoulder. This is one of the most reliable chart patterns that signal a possible trend reversal. Let's break it down step by step. As you can see, the market was in a clear uptrend. Then we started seeing three peaks. The left shoulder where price move up and then retraced. The head which push higher than the left shoulder but then came back down. And the right shoulder is smaller push up falling to break the previous high. All these peaks are connected by a trend line called the neckline. Once the neckline break, that's our confirmation of a bearish move. On this Euro USD H4 chart, we can see price already testing the neckline. Once the candle closed below the neckline, trader often look to enter a sell position. Conservative traders wait for a full candle close below the neckline. Aggressive trader may enter as soon as the neckline is touched. The stop loss is unusually placed above the right shoulder to protect against false breakout. How do we set targets? The most common method is to measure the distance from the head to the neckline, then project that distance downward from the breakout point. In this case, the price drop projection closely with the support zone around 1.1580. That's our take profit zone. So the risk to reward step is looking pretty attractive, risking a small move above the right shoulder for a potential larger downside move. This head and shoulder on Euro USD show that buyers are losing strength and sellers are stepping in. Remember, no pattern work 100% of the time, so always manage your risk properly. Would you take this trade, buy or sell? Let me know in the comment, and if you found this helpful, don't forget to like, share and subscribe for more trading setups and candlestick breakdown.